and neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, and if you have any questions, by the way, I'll put them in the question box. I'll try to answer them. If I can't, if you leave your phone number and your name, not Skype username, but your Teams username, if you have Teams now, Skype is gone. Leave that in the chat box, and Rory will give you a call back to answer any questions that I can't answer, relative to perhaps purchase price or different kinds of lengths of time for your purchase and all that type of thing. But he can answer all those, and I'll show this again at the end of the presentation. All right, and this is just a quick graphic of what it's used to be called the Compass system, the software that tracks institutions. It's now called the SPY Super System. It's been enhanced and improved fairly, I think, fairly impressively. It's very, very effective now. But this is a text alert service. It goes out to your phone on SMS alerts. I'm on the alert service itself, so I can tell how long they take. I'm on Verizon. It takes me about 5 to 10 seconds to get the alert once I enter it and send it out. All right, so that's what it looks like. So you can take trades on the go. You don't have to be, obviously, you don't have to be sitting at your computer. Okay, the first thing I'm going to cover here, and if you've heard my webinar before, you've seen this many times. This is the kind of a graphic representation of what drives the market. We have two groups. These are retail traders, these little small marbles. These are traders such as myself and most likely everybody else here are retail traders. The big marvel here is the institutions, which we'll talk a little bit more about those. The important thing to understand is, as retail traders, if we're into the market and there really isn't any institutional confluence, and in other words, the institutions are trading all the time, but they don't necessarily have to be trading any stock or any index in any particular direction. They can obviously be, some be trading long, some be trading short. So when there is no institutions that are pushing the market one way or another, we as retail traders can't do anything except cause a lot of chop and chaos in the market. So if the institutions aren't indicating that they're going to be they're trading in any one direction, we don't want to be trading. We don't want to be trading just against retail traders because there's not any market trend to follow. Now, the institutions are made up of, probably most people know this, initially investment banks, Goldman Sachs, JP Morgan Chase, Morgan Stanley, HSBC, all the big banks are part of the institutions. And we'll talk a little bit more about them. But they're also, you have pension funds, which are part of the institutions, huge pensions funds for state workers, firemen, police. There's pension funds for a lot of different types of sectors, and that's part of the institutions. And so are hedge funds. There's hundreds and hundreds of hedge funds, and they're also part of the institutional group. And lastly, there's mutual funds, such as T. Rowe Price, Vanguard, all the big mutual funds. All these folks have billions of dollars to trade and invest, and they're what moves the market. And our job as a retail trader is to identify when a particular stock or a particular index is being pushed by the institutions and join them. I mean, that's what we try to do. We identify that situation and then we join in. That's really what we're looking for. We just we're not going to beat the institutions. We're going to take our money from other retail traders who don't have the knowledge that we have, that don't have the indicators that we have, and that they don't know what the institutions are doing. We do, and we take money from them. All right, so that's important. Now, it's also important to understand that the institutions have a couple ways they trade. They'll trade with people on a desk, just like us. They have somebody sitting there clicking mice and entering trades. But that's a tiny percentage of the actual trading that takes place. Most of the trading that takes place with institutions are done by algos, computer programs. You've probably heard these algo trades. Algos are computer programs that look for many specific things. They'll look for specific setups in the market. They'll look for news. They read the news and optically read the news, and then they generate trades off of that. One way to really identify how quickly this happens is if you take a look at like the FOMC. We had the Fed this past Wednesday at 2 o'clock. When the Fed makes the announcement at 2 o'clock exactly, or it comes out in written form, the algos are reading that, and so you'll see all this volume coming into the market at 2 o'clock in a millisecond. In other words, there's no way for a person to actually click a mouse and actually get into those trades. This is the algos putting out these trades, very high frequency trades coming in, and huge volume comes running in, and the market moves up and down very, very violently sometimes. That's the algos. That's what they do. They trade off of a lot of different things, but they trade off of news. They'll also trade off of things that retail traders use themselves, like MACD crossovers and RSI convergences and things like that. And they'll identify those situations, and they'll take advantage of it by creating the look that particular situation is, like a MACD crossover has taken place. They'll create the situation where they make the MACD crossover, and then they'll reverse it right back down again, and they'll trap traders in there. And of course, they know where all the traders have their stops. They can see that on the ECN. So that's what the algos do, and that's where about 85% of the trading volume comes from now, from algos. So that's why it's our job is to identify when institutions are in the trade and trade that in that direction. All right, we'll show you how we do that. Now this seems a little off topic, I'm sure. This is a blackjack table, and ace and jack of spades, nice blackjack, couple $100 chips here. What's this got to do with trading? Well, when I first started talking to folks about becoming a trader, options trader, day trader, one of the things I heard all the time was, it's gambling. It's fixed. You can't make any money because it's just gambling. So is it actually gambling? Is trading options actually gambling? Well, I'm using this analogy because when I was much younger, much younger, I made my living playing blackjack in Las Vegas in casinos as a card counter. Card counter is a person that we're not counting individual cards. We just keep track of what the composition of the remaining cards is once the hands are start played, and we can tell by tracking when the little cards are removed and when the big cards are removed what the composition of the deck is left and whether that deck is favorable to the player or favorable to the house. As the small cards, deuce through 7, are removed from the deck, the more of those that are removed, the bigger advantage the player has. So that's how we what we call a card counter. That's what we were doing, tracking that. By knowing when the deck was in my favor, this gave me a mathematical edge over the casinos by knowing when the cards were in my favor. So I would make bigger bets, play more hands. When it was against me, then I would take one hand and play the minimum. That gave me a mathematical edge, and that's how I made my living for a while. Trading stocks and options is very similar in that without knowing what the institutions are doing, the trader has no edge. So in essence, they're gambling. So trading is, if you don't have an edge, if you don't know what the institution is doing, trading is gambling. But both playing blackjack and the trading options and stocks, they both require discipline, emotional control. This is the thing that sinks most retail traders. You get a good methodology or a good strategy, but they have a hard time sticking to it, and they have a hard time being patient. They let emotions take over. So both of these require discipline and emotion, but the similarity is that if you have a methodology and you know what the institutions are doing, you have an edge over the other retail traders in the world, and there's billions, tens of billions of them. So I call the SPY super system my card counting system, because this gives me an edge over other traders, allowing me the ability to become consistently profitable. Because now I know what the institutions are doing. When they're in there, I'm with them. When they're not, I'm not trading. So the SPY super system, in conjunction with identifying the best high probability trades, can lead to consistent profits. So not only you have to know if the institutions are in there, but it does take some technical analysis and some understanding of what the market conditions are at the time to take advantage of this. But that's why I show this up here as a blackjack player. That's what I did for a while, for a couple of years, and that's what gave me an edge over the casinos. Okay, so in the room and on the alert service, we have a couple of rules that we trade by. First thing is we trade the best and skip the rest. Sounds really simple. It's not that simple, but we're obviously trading the best, which means when the institutions are in the trade. Now, skipping the rest is also very important. If you can not take a trade that maybe you thought you should take, if you cannot take a trade based on things such as the institutions aren't driving it, it's been very choppy, the technicals on it are not good, you skip these. This puts a lot of money in your pocket. missing, bypassing a trade that was going to be a loser is just as good, if not more important, than taking a winner, because losers have a much more impactful effect on your trading mentality than winners do. You remember your losers much more than you remember your winners. All right, the other thing is, and I point this out in the room every day, our objective is not to make trades, our objective is to make money, right? This is trying to keep the retail traders from overtrading. Overtrading is a very big problem for retail traders. They feel like they got to be in a trade all the time. You don't. There's a lot of times when you shouldn't be in any trades. So again, our objective is not to make trades, our objective is to make money. All right, we do that by trading the very best setups. Okay, maintaining discipline and means learned and follow the process. Discipline means having a strategy and a methodology that you understand and following it, sticking with it. All right, so you have to learn and follow the process. The process, we'll go over what the process is to find these high probability trades. And remaining patient is the most important thing. Remaining patient, when you find a stock, you don't want to just jump into it. You want to get into it at a very good level. You don't want to be chasing it up on a big move up in the morning or a big move down. You don't want to be chasing it. You want to wait till it comes near support or resistance. So being patient is very critical. And a lot of times we'll sit for several hours without taking a trade because there is no setups that meet that criteria. Okay, now as a profitable trader, we need an edge over other retail traders. Again, we take our money from other retail traders. We don't take our money from the institutions. We have 4 edges. First one is the SPY Super System software. This tells us if the institutions are in the trade or not. This is basically a rule that we have to stick with. If our SPY Super System tells us that the institutions, we don't know if they're in the trade or not, it's just chopping around, we're not going to take the trade. Once we know the institutions are in the trade, that is a huge edge for us, and that's what the software tells us. We also trade relative strength and relative weakness. Now, this should not be confused with our SI. This is a relative strength indicator. Relative strength and relative weakness is basically comparing how the stock you're looking at is trading versus the S&P, the SPY, how the SPY index is moving. If you've got a stock that's moving up, when the SPY is moving sideways or down, it has relative strength. If it's moving down, when the market's moving sideways and up, it has relative weakness. This increases your percentage win on a trade by quite a lot by trading relative strength and relative weakness. We trade with the market trend if there is one. A lot of times there's no market trend. We trade with the market trend. And then lastly, buy near support and sell near resistance. Very critical. This keeps you from chasing trades and entering a trade when the support level is so far away that you're not going to be able to stand the pain if the stock turns against you. By the time it gets back to your support level, you're down so much money that you're going to get out. So you want to get in near support and sell near resistance level. This is going to keep your losses when you enter these trades very small. Okay, that's the whole point of it. Okay, now the compass system, which is now called the SPY Super System, and I just leave this old slide up here, but it identifies the highest probability trade setups while sidestepping setups that look good, but will fail more often than they succeed. Right? It does this, and the SPY Super System does this by identifying when institutions are driving the move and when they're not. It analyzes a lot of complex trading data and displays the results in an easily identifiable visual format. And this is really helpful because as a new trader, sometimes they don't really have a good grasp on technical analysis. So this makes it easy even for somebody who's a new trader to determine if institutions are in the trade or if they're not. And we'll see that here in just a couple minutes. All right, so how does it give us an edge over retail traders? We're only taking trades that are being driven by the institutions. I want to keep emphasizing that. We trade stocks that have relative strength or relative weakness versus the SPYs or the Qs, and we trade in the direction of the overall market, right? And it gives us an edge because our trades are going to be supported by institutional buying and selling. That's what we want. They'll be outperforming the index, the SPY or the Qs, and they'll be moving in the direction of the overall market. This gives us a huge edge. If you're able to do this, you're going to be head and shoulders above about 95% of the retail traders in the world. Okay, now the SPY Super System software, before I start showing this, I want to just kind of cover something here. The SPY Super System software is the critical element in finding and trading the highest probability trade setups. Very important, right? The SPY Super System software, it's the engine that drives our exceptional results. And we're going to look at the results that we've had in the room. And I mean, again, we maintain about an 85 to 90% win rate. Keep in mind when you see those, it's not just a random thing or a luck thing. It's not a coincidence. It's because we have the SPY Super System to tell us when we should enter trades and when we shouldn't, right? Critical. And the ability to identify when institutional players are driving a bullish or bearish move and when they're absent, that's the key factor in pinpointing these high probability trades. And that's the function of the SPY Super System software, and it's the critical component. It's what makes this methodology and the system successful year after year after year. All right, just kind of an aside here, I do, Rightline has a YouTube channel. I'm on there every day at 11:30 for an hour. If you go on the YouTube channel and come in there, you'll be basically in my room. You'll see all the discussions we have in there. You'll see the chart. You'll see all the talk we have about stocks, and you can answer questions in there, and I'll answer them for you, and gives you a nice exposure to the room. All right. As retail traders, I just want to kind of run through this. I did a video on this, the most common mistake retail traders make. See if you can see anything in here that strikes home with you. Not considering current market conditions is one of the biggest problems. If you're in a choppy day and you're trading just like it was a trending day, you just keep taking trades because that's how you trade. You're not considering the current market conditions. That's really important. What the market's doing is the number one consideration when you're trading. It really is. You really want to be trading completely differently when the market is choppy than it is when it's trending. You can obviously take longer trades. You can take more risk. When the market's choppy, you got to take smaller risk if you take any trades at all. Another thing is over trading. This is basically lack of patience. Traders feel like they've got to be in a trade. You know, I'm a trader. I'm sitting in front of my computer. I need to have a trade on all the time. No, you don't. No trade sometimes is the best trade. Trading your P&L instead of technicals. This means you're basically determining whether you should be in a trade or out of a trade based on how much money you're making or losing. It's got nothing to do with that. It has to do with what the technical setup on the stock is. If it's a good technical setup, it's breaking through resistance, it looks like it's trending up, then you can stay in it for a while. If you get in and it goes against you a little bit and you're down money, even though it's still bullish, you bail out because you're losing money. That's trading your P&L instead of your technicals. You should not be looking at your P&L during the trading day because it adds emotion to your trading. Trading what you think instead of what the price says. And I'm going to show you a quote on this in a minute. But trading what you think means you look on, you read something on social media about a stock, you see it on Bloomberg, you hear your buddy's uncle's cousin's friend told you about this stock. That's trading what you think. And this was really very evident this last year, because when the market was down a lot and then up a lot back in April, when the tariffs went on and the tariffs went off, there was a huge amount of bearish sentiment across the whole trading world. You were reading articles about there was a correction coming, the economy was going to tank, things were bad, and there was this bearish view on the market. Now the market was going up, but they were bearish, and people stayed short and were taking shorts, and they were getting killed. And it was because they were trading what they thought the market should be doing instead of what the market's doing. What we do in the room for our swing trades and our intraday trades, we trade what the market price is telling us is going on right now. We don't pay any attention to what any guru says or what I see in X or what I see on Bloomberg, any of that. I don't pay any attention to it. Keep this in mind. As far as predicting what the market's going to do, right? You know as much about that as anybody does. They don't know. Nobody knows what the market's going to do. And these folks all jumped on the bandwagon of being short from April on, and they missed a huge opportunity for a 6-month run up in the market. So not only did they lose money because they were short, but they lost an opportunity of taking long trades. And this is very, very a big problem. And if you know who you are, if you trade like that, it's going to be a big issue for you. Trade what the market's doing, not what you think it should be doing. Over leverage, taking too much risk, not using the daily chart for swing trades. This is really important as well. All right. When you're going to take a swing trade, if your daily chart must be bullish. You should not be trading long on a stock that has a bearish daily chart. You have no staying power. You can't stay in the trade. Okay. Lack of patience. Obviously, we talked about this. Forcing trades, and this is to lack of patience. You know, I've been sitting here a half an hour. I haven't taken a trade. You start justifying taking trades. Attempting to pick tops and bottoms. This is a horrible one. You know, Tesla's fallen down. They can't go any lower than this. Or Microsoft's moved up really fast. It can't go up any higher. Picking tops and bottoms is extremely dangerous. Most stocks, by the way, that put in new highs or put in new lows, all-time highs and all-time lows, or annual highs or annual lows, most of those stocks will continue for a while. All right. So what you're doing is you're putting yourself in a position where you're going short a bullish stock exactly when you should be going long. Not waiting for confirmation to enter a trade. This is a critical one. Stock breaks through support or breaks through resistance to the upside, and you just jump into it. You don't wait for it to retest. You don't have any confirmation that it's going to happen. And the Heiken-Ashi candles, by the way, helps a lot with this particular situation. And FOMO, fear of missing out. This is greed. This is when folks see a stock moving fast. Fear of missing out is nothing but an emotion. It's greed. And when a stock starts to go against you, even though it's still bullish, and you bail on it because you're down money, that's fear. So you're basically trading on emotions if you're trading like that. Okay. And I wanted to talk about again trading what you think instead of what the price says. This is a quote from Stephen Hawking, and I really like this because of what it emphasizes. Again, the greatest enemy of knowledge is not ignorance. All right, not knowing is not the greatest enemy of knowledge. It's the illusion of knowledge, thinking you know something that you don't know. That's what traders do when they form a bias on the market based on not technical setups, not price action, but something they read, they heard, or they saw. Don't be trading what you read, think, or see, right? Because you are now trading with the illusion of knowledge, and this is what happened from this past April through this summer. All right, people were trading with the illusion of knowledge. They were under the illusion that they knew what the market was going to do, that was going to go down based on what they read about or what they heard about, and it didn't happen and it wasn't happening. That's trading with the illusion of knowledge, and it's the biggest enemy of knowledge. All right, you're trading something you think, and it's not right. Okay, so that causes a lot of losses for folks. All right, now I'm going to talk about the SPY super system. We have all of the indicators are color coded that we're going to look at. Green is bullish strong, blue is a bullish trend, red would be bearish strong, and yellow is a bearish trend. That's all we need to know when we look at the indicators on the SPY super system to see what they're doing. We can get into more details, but that's what you want to remember. All right. Okay, so this is I'm going to show you a couple of charts here. This is the SPY super system. This isn't the one. I've actually modified it since then, so I'm going to show you that. We just changed it a little bit this week, but here's what you've got on here. You've got the current time frame momentum right here. All right, so this is the time frame of whatever chart you're looking at. It's a 5-minute chart. This is the current time frame momentum of on the 5-minute. Tells you what the institutions are doing on this particular point in time. This is multiple time frame. Now, the multiple time frame is looking at 3 different time frames, what they call fractal. In the 5-minute chart, this is looking at the 5, the 15, and the 45, and it's telling you whether the institutions are in it or not in it, or if it's just chopping around. For intraday trades, very quick trades, this is what you focus on, because you're only going to stay in the trade for a few candles. If you're trading a swing trade, when you're looking at your daily chart, these 2 indicators need to be aligned. They both need to be green or blue for long, red and yellow for short. Right? So if this was a daily chart, you couldn't take this stock long or short because it doesn't align. This is the long-term trend. Same colors. Now up on the price portion of this, there's a few things that are critical. This is the VWAP, the volume weighted average price. This is something that all the institutions use. It's a support resistance level. This is one of our major ones that we use to get into trades on a 5-minute basis. This is not the pivot. This VWAP is not effective on a daily chart. It's only effective on like a 5-minute or 15-minute chart, right? But I use it on the 5-minute. The next thing we have here is the 15 EMA. That's this little green line here, right? 15 EMA is which is what it says. It's a 15 exponential moving average. That's also another support resistance level, right? And here we have pop out of the box symbols. These pop out of the box symbols are arrows that indicate not only is the stock moving up, but it's breaking compression. Compression break is a very helpful method to get into a trade. So that's what that tells us here. This is the market internals. This tells us whether the whole market, the whole S&P, the whole New York Stock Exchange is moving up or moving down. If it's moving up green, it's very strong. If it's moving up blue, it's fairly strong. And then obviously red and yellow, the opposite directions. This tells us at any point in time during the day what the overall market trend is, right, to trade with. And one other thing here is this pivot point. This pivot point is the only pivot point I use. It's very effective. It's again, it becomes a support or resistance level. All right, and again, I just put this on here. This is the current market conditions. This was a newly added feature, so that's why I put it in here. This tells us what the overall trend is of the whole New York Stock Exchange. Okay, this is a template we also get. If you buy the software, you get this template here, and you also get this template here. This is just for folks who are trading intraday trades. They just want to trade 5-minute off the 5-minute candles or the 2-minute candles or the 15-minute candles. This is all you need. You don't need the multi-time frame or trend. You don't need any of that. This is all you need. So you can get this template and you can flip-flop them back and forth during the day from one to the other. All right, so that's just so you just know that's available. Now, I just updated the last 2 weeks. I've updated the SPY Super System chart layout. I'm going to show you what I added. I haven't really had a time to do a video on it yet, but I'm going to show you some of these enhancements help you trade and can help you trade. It's been optimized for clarity and precision. There's been things removed to clean up the chart. The addition of the 8 exponential moving average. This is important. The 8 exponential moving average provides improved signal confirmation and trade timing for both entries and exits. Right? This is really, really important, and it's going to help a lot. Okay, this is what the new layout looks like. Right? You notice that the 15 EMA is right here. It's still here. It's the green line. But see, the 8 exponential moving average has been put in here, right here. All right, this has been added to it. Right, and these two lines can work in conjunction with each other. We'll talk about that a little bit. But when the 8 crosses up through the 15, it's a bullish signal, and when the 8 crosses down through the 15, it's a bearish signal. So that's one of the things that we can lean on. But one of the things that's most important about the 8 and 15 combination, and this is true on a 5-minute chart and it's true on a daily chart. When a stock price breaks through coming down, let's say you're long a stock, and it breaks through the 8 and comes down below it, I don't exit there. I wait for the 15 to see if it supports, because many, many times when the stock price breaks through the 8, it'll hit the 15 and bounce right back up again. And this happens a huge amount of times. So this gives us a little bit more flexibility in our trades to stay in them for a long or a short, longer than we normally would. So I love using these in combination, both on the 5-minute chart and the daily chart. Everything else here is pretty much the same. These indicators are the same as they were. This is actually the indicator itself, the modified Laguerre. This is an oscillator that has the divergence stripped out. This only shows real momentum. All right, so this is what the charts look like when we look at the software. I'm going to go to a live chat here a little bit later. I'll show you exactly what it looks like. But here's your VWAP, your 15, and your 8. All right, this is how you intraday trade off of this kind of information. Okay, this is a trade I just want to point out. This is a 5-minute chart. This was an NVIDIA trade we took off of a 5-minute chart. These are with the new indicators with the 8 and the 15 right here. You notice right here, the current time frame momentum, which is what we're interested in. You notice that it goes from yellow to yellow-red. This is bearish. Institutions are selling. Notice it pops to blue right here. Institutions are now starting to buy. And you can see the indicator moving up. They start to buy right here, right? You see where we are? We're right at the VWAP. Stock price coming right off the VWAP, bouncing up. This is where you get in right here or right here. One of these two levels is where you get in. As it breaks above the VWAP and it breaks above, and notice the 8, the white line, notice that it's crossing the 15. This even adds even more conviction to this trade. So this is where you would take the trade here right here, and you ride it up. Just as long as it stays above the 8, you stay in it. And then when it starts to lose momentum, you get out. Notice it switched back to yellow here. You're out of the trade. But that's a nice trade. That was about $2.50, $250 a contract on calls on NVIDIA right there. All right. Hopefully that you can see that clearly. All right. This is another trade we took on the SPY. I don't show the entrance and exits, but I just want you to see. We go from bearish to bullish right here. Notice we're breaking above the VWAP with a pop out of the box symbol. And this is moving up. This is before I actually had the 8 on here. But this was off of the 15, and the VWAP works extremely well. That was another nice trade. Okay, and this was a Tesla trade. We took it first thing in the morning. It goes bullish immediately. We take it on this pop-up as it breaks above the VWAP. We ride it up here, and as soon as it starts to fade, Matt, notice it goes to yellow. We're out of the trade. So that's how we intraday trade these. Okay. This was a trade we took on NVIDIA. This is a swing trade, right? It's a swing trade. Now, remember, in a swing trade, your current time frame and your multi-time frame both need to be bullish or bearish. They're both bullish right here. What we did was we wait for the stock to pull back to the 15 on the daily, and then we enter right here, and we get out right here, right? That was another nice trade. That's a swing trade. That's trading off a daily chart. And this is an SMR trade that we took. Again, this is a swing trade. Notice it went from selling to buying right here. The current time frame, the multi-time frame was already indicating buying. We take it right there and move it up to the side, upside. That was a pretty nice trade in SMR. Getting in on 513, out in 515, 56% profit. 2,000 invested, produced $1,170 profit. Pretty nice trade, but again, I want you to see how these indicators are used. Okay, this was Wendy's. This was a short. I'm not going to show too many of these, but this is when we took it. Notice that they're buying here, they switch to selling. We take it here, we write it down overnight, and we're out. Okay, so those are what the indicators are. We're going to get into those a little bit after we go over the Heiken-Ashi here. This I just saw as kind of a little humor. This is what a trader looks like when they're trading emotionally. They traded a FOMO. They had a stock go against them. They basically are completely lost as far as how they should be trading, and it's very stressful. You're trading emotionally. It's a horrible feeling, and I suspect as most traders, they've gone through this. I obviously did when I first started trading. This is more what you feel like when you have confidence in your trades and you can lean on the institutions and you can lean on your methodology and you feel confident in your trades. It's very important to feel confident about the strategy that you are using. Okay, this I just kind of, the process precedes results. I put this in here because it's very important to learn the high probability trading setups and internalize those and use that, learn that. This is the most important thing. A lot of people make the mistake of focusing on their P&L to make a determination if they're trading well or not. This is not going to tell you anything. If you're just focusing whether you're winning or losing, you're not focusing on what's important, which is, are you taking the highest probability trade setups? You're looking for something that's going to give you a win ratio that's at least 75%. If you're trading a P&L, you're going to get misled. Just because you take a trade and you make money on it doesn't mean it was a good trade. Just because you take a trade and you lose money on it doesn't mean it was a bad trade, right? We have criteria that we use for that. So it's important to learn this process. The process comes before your profits. Now we focus on that in the room a lot. That's what I'm trying to help people learn. All right, so this is basically a high probability trade setup funnel. This is what I look for, what we look for in the room for trades. Now, if it's going to be a swing trade, we have to make sure the daily chart is bullish if we're going long, bearish if we're going short. This is important, right? Once we've determined that, we look at the 5-minute chart and try to get in at a good level. You know, a good level we're not chasing. Then we trade with the trend, both the stock and the market trend. This is the context. What's the context of the market? What's the context of the stock? If the market's choppy and your stock's moving up, you've got a trend you can follow on the stock. If the market's moving up and your stock's moving up, you've got a trend in both the stock and the market that's going to give you more of a tailwind, right? SPY super system must align. This is a deal breaker. The SPY super system, especially for swing trades, they've got to show that the institutions are buying if you're going long and selling if you're going short. I'm not taking any trades that the SPY super system is telling me doesn't have institutional involvement in it. It's got to have it. Then I look for relative strength and relative weakness. Once I found some stocks that meet this criteria, I'll look to see which ones have the best relative strength or best relative weakness versus the market. Those become higher probability candidates. And then you need to try to enter near support or near resistance. If you're going to sell, if it's going up, you're going to short it, wait for it to hit resistance and turn back down. If you're going to go long, wait for it to come down, hit support and bounce and go up. That's what you're looking for. That's what the high probability trade funnel is. This is what I go through in every single trade that I take. Okay, so in the room, just to understand what we use, what are our strategies? We use several different option strategies here. And it's important, by the way, to have strategies, a bunch of strategies in your tool belt that you can use so that you can use the right one depending upon what the market conditions are. We do straight calls and straight puts. We had, as I mentioned, we had Corning this week that we've had on for a week or so, GLW. Those are straight calls. We did make straight calls. They made about, I think about 35 or 40%, and we do the same thing with puts. I also do what's called straddles and strangles. Straddles and strangles, if you're not familiar with these are directional trades. What you're doing is you're taking a call and a put. So you don't care which way the stock moves, we need it to make a big move. So we do straddles and strangles. I also use debit spreads using weekly options expiration. These all expire the same week, right? I don't go out in time on debit spreads because debit spreads that you go out in 2, 3, 4 weeks out, your ROI is much slower than it is if you take it for the current week. You're looking for stock that's going to move fairly quickly, and you use the current week's expiration. The reason for that is on a debit spread, you're taking, for example, a call debit spread, you're taking a call and then you're selling a higher priced call, so that higher priced call is gonna time decay. But if you're out 3 weeks, the time decay is going to be so slow, it's not going to help the trade at all. If it's going to expire this week, it helps a lot, right? So that's what we use. I also use time spreads over earnings, and we did 3 of these this week that really, really worked well. We had Merck, we had CNC, and we had Gilead yesterday. All produced between 30 and 40% profits. These are time spreads. These are non-directional. What we're looking to do is take a trade just before earnings, so that once earnings comes out, we can capture the volatility crush. Before earnings come out, the market makers jack up the price on the puts and the calls, make them more expensive because they don't know which way the stock's going to go and they don't know how far it's going to go. So we take time spreads when we find the correct criteria. There's the specific criteria you have to have for time spreads, but these work really, really well. And you put them on in the afternoon, take them off the next morning, generally for a nice little gain. And they're again, all of our trades are a defined risk. You can't lose any more money than you put into the trade. They're all defined risk. And then I use a weekly ATM strategy that we're in right now on Schwab. This is a really, really nice strategy for a neutral to bullish stock where we sell puts every week to bring in premium and just keep selling puts each week. And in the meantime, we also have a longer dated long put. In other words, a put that's a lower price below our current put, so that we're protected in case the stock drops against us. If it turns around and goes against us, we can just buy back the put for this week and we can hold on to the long put and make money. This is a really nice strategy. And now that the market's settling down a little bit, I'm probably going to do more of these. We have one on Schwab right now, which is really doing nicely. And I do credit spreads to capture premium. We have credit spread on Microsoft right now. And then this is a kind of a different one. This is a SPY super system trade. These are the SPY super system trades for very high probability trades to catch the SPY, the Qs, the IWM, the futures, or any individual stocks strictly off of a 5-minute chart. So these are trades that I have a video on. You can learn to trade these. I let you know when I see them, but a lot of traders in the room actually do these all by themselves off of the software. But these are very quick trades. I can't post them and I kind of alert on them. They're very quick, but we use them a lot on the 5-minute chart. And you can get a lot of trades doing this, and they'll all be high probability. But again, you need to be able to do day trades. You can't do this if you're under PDT rules, where you can't take more than 3 intraday trades a week. Okay, so those are our strategies. The alert service is designed for day trades and short-term swing trades. It's designed for traders who can't watch the market all day. And it gives you real-time alerts of the very highest probability trade setups. We take trades in the room that I don't alert on because there are multiple reasons. They're going to be too quick. They're too late in the day to take. Maybe they're too speculative. But the ones you get on the alert service are very, very high probability trade setups. We have a tremendous track record with these. And how we identify the highest probability trades? Again, are the institutions in there? What are the market internals? Are the market internals also bullish if we're going long? And then I do more technical analysis, which I'll talk about. I do a lot of technical analysis on stocks. This is a key thing. I go over it every day on what I'm looking for. If somebody calls out a stock in the room and they want me to look at it, I try to get very detailed on the SPY Super System and on my TC2000, which I use for my charting to indicate why we should take a trade or not take a trade. Okay. This is my equity curve for this year, from January up till, I guess, October. This is based on $2,000 a trade. This is just basically a random number. I say $2,000 a trade because I have to have something that I can base some profits and losses on. I don't think anybody takes the exact same amount in every trade, but this is based on if you're in the room and you took a $2,000 risk on every trade that we've had this year, this is where you would be. We're up a little over 50, which is actually pretty good, a little over 50,000. Okay, now we're going to talk about Heiken-Ashi candles. Any questions before I get into these Heiken-Ashi candles? Because I'm going to show you some live charts with these as well. Okay, all right, so Heiken-Ashi. This is a candlestick chart. These are Heiken-Ashi candles. It says British pound, Japanese yen, doesn't matter. Could be Microsoft, could be gold, could be silver, could be anything, could be oil, could be Tesla, but these are what the candlesticks look like. And it's really important to understand. This is the most important thing to know about Heiken-Ashi candles. Bearish Heiken-Ashi candles have flat tops, just like these. These are bearish. This is a bearish trend using Heiken-Ashi candles. You get flat top, flat top. Notice no wicks on these things. They're coming down. These are bearish Heiken-Ashi candles. Bullish Heiken-Ashi candles have flat bottoms. This is important to understand this. Flat bottom, flat bottom, flat bottom. You can see trends very easily. It takes a lot of the noise out of the market. Now, notice one other thing. You notice that on the chart, the candlesticks, each candlestick starts in the middle of the previous candlestick, right? Starts in the middle, starts in the middle, starts in the middle. That's because of the way they're constructed. They always start in the middle of the previous candlestick, right? Always. So those are Heiken-Ashi candles, bearish and bullish. Now, what we're looking for, ideally, with Heiken-Ashi candles is a reversal. We're trying to find a stock that's bullish. It's pulling back, or bearish and moving up, but bullish and pulling back, like we like this stock long, it's coming back hard. We're looking for it to find a support level. And then we're looking for a Heiken-Ashi reversal candle to the other direction. And the reason this is important is Heiken-Ashi candles, once you get a reversal, because of the candle itself, the way it's constructed, they are confirmation of the reversal. They will confirm that the reversal has taken place, right? We're going to look at that here in just a second. Now, one other caveat: when the trend that you're trying to reverse is very strong, like this, big candles, you don't take the reversal on a small candle. These candles are nice, and this looks like a Heiken-Ashi reversal right here. Okay, see the flat bottom, but see how small this candle is in respect to these. Okay, relationship to these. So this isn't something I would take. Now it worked. You could get in here and ride it up here and get out, but this is what I'm looking for. I'm looking for a pullback, and I'm looking for a big Heiken-Ashi candle for the flat bottom. That's a Heiken-Ashi reversal that's bigger than these, as big or bigger than these candles. This is where you get it right here. Right, this is your reversal. This is a Heiken-Ashi reversal candle for getting long the stock. And you can see how nicely this thing worked. Flat bottom, flat bottom, flat bottom, flat bottom. Keeps moving up, keeps moving up, keeps moving up. Beautiful trend, not a lot of noise. That's what you're looking for Heiken-Ashi reversal to go back into an original trend, and it's major, major help to trading. I'll show you some Heiken-Ashi candles on daily charts here in a bit, and you'll see how beautiful these things are for swing trades. Right? Really, really important for swing trades. So there's your Heiken-Ashi candles. Again, flat top, bearish, flat bottom, bullish. right? So again, distinctions of Heiken-Ashi candles. The bullish Heiken-Ashi candles have flat bottoms. The bearish Heiken-Ashi candles have flat tops. My point is that these candles flat bottoms are confirmation of a trend. Correct. Yeah. If the flat bottom, for example, on flat bottoms are bullish, that is confirmation of a trend. I mean, as long as the candles stay with flat bottoms, as you won't repeats one after another, yeah, that you would stay in it. It's in the you're still in the trend. It's a bullish trend. Correct. Does Heiken-Ashi candles work on tick or range or charts? Heiken-Ashi candles will work on any candlesticks that you've got. They work on 1 minute, they work on 5 minute, they work on daily, they work on weekly, they work on monthly. They work on any particular thing you're doing. I've never used them on a tick, but I'm sure they do. Tick is very it's hyper scalping. Okay, John. So that Heiken-Ashi candles, again, this is what you want to remember. Heiken-Ashi candles, the bullish ones have flat bottoms, the bearish ones have flat tops, right? And kind of a side here, if you're used to using regular candles, for example, if you look at a bullish candle, regular candles, and the bullish candle has a big wick on the top where the buyers drove the market price up and then it pulled right back again, that gives you some reason to pause as far as being long. Heiken-Ashi candles aren't like that. Flat bottom candles that are bullish, that have wicks on the top, are more bullish than the ones without the wicks. Okay? Bearish Heiken-Ashi candles have flat tops, and bullish Heiken-Ashi candles have flat bottoms. Or again, the bullish reversals are identified by flat top Heiken-Ashi candles, followed by flat bottomed. And they don't have to be one right after the other. There can be some dojis in between. And bearish Heiken-Ashi reversals are identified by flat bottom Heiken-Ashi candles, followed by flat top Heiken-Ashi candles. Right? This is the main thing that I use it for, which is to identify reversals, because that's where I want to enter the trade. And then I'm trying to get into the trade at the very best possible time. All right. So again, this is just going to talk about, we just talked about a little bit. This is a chart with the same information we look for. And here again, here's the bearish Heiken-Ashis, followed by bullish, but again, not big enough. Now let's say this blue line right here was like the VWAP or one of your support resistance levels, and you're looking to go long the stock. You see how it comes down. You see you get a Heiken-Ashi reversal candle here that pushes right through it. There's your entry right there. That's your entry. As it breaks through there, you can take it. Now, it's important to also understand on Heiken-Ashi candles, once that candle is created, if you're on a 5-minute chart, once it's created and you're more than 2 or 3 minutes into the 5-minute candle, the likelihood that bullish candle is going to remain that way at the end of the 5 minutes is extremely high. Once you've created a Heiken-Ashi candle partway through the actual candlestick time, it's likely gonna stay there. So a lot of times you don't actually have to wait for the candle to finish forming like you would with a regular candle. But see how you get in right here as it breaks above that if we call it the VWAP, and you see the nice move you had here. Now, as long as it stays above the VWAP, you would stay in the trade. Then you would follow this and you would stay in it as long as momentum is maintained. And you have really tremendous momentum here. Now, notice we're getting a little hesitation here. You might you may take profits right here, or you might wait, but you got to get cautious. Now it moves up again, and now you're definitely out. Once you get the wicks and the tails, and then a flat bottom, here's a Heiken-Ashi bearish reversal after this trend, you're out of the trade. You're out of the trade right there. All right, that's what you're looking for. Okay, does that make sense to everybody as far as what we're looking for here? Heiken-Ashi reversals for confirmations of a return to the original trend that you're trying to get into. Seems more elegant solution for trades. It is a more elegant solution for trades. It's I mean, you can't use it all the time. If you're in a choppy market, for example, and you're trying to do a quick trade on the SPY, bouncing up through like the VWAP or something, if the market's very, very choppy, a lot of times if you wait for Heiken-Ashi candle, you're going to miss part of the move. And if you're in a really choppy market, you may need to take the profits pretty quickly. But if you're in any kind of a trending type move, waiting for the Heiken-Ashi reversal is really, really helpful, because it is inherently its confirmation of the break. Okay. All right. So there's Heiken-Ashi candles. Again, we went over this. We already did this one. The advantages of the Heiken-Ashi candles: it smooths out price action, reducing noise. Okay. Makes identifying trends much easier. John, Can I get a recording so you can go back to listen again? Yeah, they'll send a recording out to everybody who registered for the webinar. Yep. So again, it smooths out price action, reducing noise. This is very helpful. If you're a trader and you've been trading, you know that those little 5-minute candles, you're green, you're in a long trade, and you get this scary 5-minute candle. It reduces that noise, and so it's going to take some of the emotion out of your trading. And that's really what you want. It makes identifying trends much easier, obviously. Improves identifying confirmation of trends or trend reversals. This is a big deal. This is a very big deal. And it helps identify potential exits when candle bodies shrink or reversals occurs. Now, personally, when I'm in a trade and I'm thinking of getting out, I usually switch to regular candles. In other words, I've got a big enough profit. I don't want to push it too long. Then I'll switch to regular candles so they don't have to wait for 2 candles to create the reversal back the other direction. And I'll exit at that point. Okay, I'm going to show some charts. This is TC2000. This is a charting program I use for charting. I use this for charting. I do this for some technical analysis. I like it better than Thinkorswim for my charting, but I don't have any indicators on here like I do with my SPY super system. So I have to have the SPY super system to tell me if the institutions are in the trade. But this is a chart of Uber, just that I made a graphic of. But this is, look at May 1st right here. This is 2023, but it doesn't matter. This is a Uber, and you see this pop, and then this pop like this. Very difficult to take a trade after a gap up like that. Now look at the same chart here. Look at May 1st. Okay, look at May 1st right here. Right, these are Heiken-Ashi candles for Uber. You see what you get here? Now you see the Heiken-Ashi bearish trend. Flat top, flat top, flat top, flat top, doji, flat bottom, Heiken-Ashi candle, reversal, boom. You take this is where you take the trade, right here. Take the trade right here, which is what, May 1st. And then you get flat bottom, flat bottom, flat bottom, flat bottom, flat bottom. This is where you ride that trade up. And then you start to get a little leery because the candles start to get tiny, and then you're out right here, okay, as it flattens out. But look at the difference. This is where you would get in the trade. If you were using Heiken-Ashis, you wouldn't have been concerned about, you would have taken the trade right here, right? And then you would, boom, you get that big, huge move up the next day. Yeah, it smooths out the noise because of the gapping, RJ, that's exactly right. There's no gaps on Heiken-Ashi candlestick forms, right? The gaps are filled because it's using 2 candles to create it, right? And I'm going to show you some trades here. I'm going to show you some setups. I'm going to show them to you in Thinkorswim on the SPY super system. I'm also going to show you on TC2000 because that's where I find a lot of my swing type trades. Okay, so let's take a look at some live Heiken-Ashi reversals. I'm going to bring up my live chart here for the SPY super system. Where is it? Right here. Okay, so this is a live chart. This is my SPY super system on my screen. This is what if you're in the room every day, this is what you see. You see all the indicators. You see the couple. This is a relative strength scan, relative weakness scan. It comes on a 5-minute or a daily, and this is what's called the bullish Laguerre. This is what I use for finding swing potential trades. Okay, so this is the close yesterday on the market on the SPY, right? And I want you to notice one thing right here. This was late in the day yesterday, right? I took a trade here. See how it went from yellow selling to blue buying right here on the SPY? I took it right here because notice that it's above the 15, it's above the 8, it's above the VWAP. It broke right through the VWAP right here at 305. And a bunch of people in the room took this one as well. So it breaks above the VWAP right here on 1505. And then it moves up, moves up, moves up, moves up, get a red candle, you're out. You're out, you're out. From this went right here, basically from 682 to 684. That's $2. That's a $2 move. So easy, very easy to get a $100, $150 a contract on that move off the SPY. And let me show you one other thing. Let me switch this over to Heiken-Ashi candles. All right, so let's go to candle type Heiken-Ashi. All right, here's the switch here. If you look, and let me just zoom in on this a little bit. All right, so let's go back here. See this wicket? See this tail here? See the flat right here? You can't take it because it's yellow. But then the next one, you get another flat bottom. This is where you take the trade. Heiken-Ashi reversal right there. Take the trade right there as it breaks above the VWAP. You got institutions buying, and you ride it up. Okay, so that's how we use that. Okay, I want to show you one other thing here on GLW. Again, this was GLW. This was a swing trade that we had on. Let's go back and take a look at the daily chart because it was a swing trade, so we were interested in the daily chart. All right, so this is where we took it. Right here. You see this? Where we took it right here. I think we took it here. Yeah, we took it here. See, we have green and green, right there on 1029. Take it right there. We've been in this trade several times, by the way, but we rode this thing up and we get out yesterday on this big pop. And this got us out right here at about 35%, 35 or 40% gain. We took it right here on this move up, but we were out before it pulled back again. And this has been a good stock to trade because you go back and look at it over here. You see here's another entry right here. It's been a very, very beautiful chart. And we'll talk a little bit more about that one. All right, so, but a couple of them I picked out to look at was this is QS. These are potential swing trades based on Heiken-Ashi candles. Right, so here's QS from yesterday. This is a daily chart right here. Notice it's bullish, multi-time in current time frame, bullish, and flat bottom. Heiken-Ashi reversal, much bigger than these candles. Beautiful entry on this. All right, so that's what we look for. And I have to say that this VWAP right here is not on the. You can't use this on the daily chart. I need to get rid of that because we're not really interested in that. But notice the 8's still there, which we use, right? But that's a Heiken-Ashi reversal on QS. It was also a nice one on CNX yesterday, right there. But you see something about CNX. Let's look at CNX. Looks like a nice Heiken-Ashi reversal. See this? Can't take it. You cannot take a swing trade in CNX just because of Heiken-Ashi reversal because the multi-time frame momentum is still kind of bearish. Okay, it's slightly bearish, so it is not the very high probability trade setup that we would normally take. And Cisco, beautiful trade in Cisco. Another nice one to take out. Right, so that's what we're looking for. So we can use them on 5-minute charts for intraday trades. We can use it on daily charts for swing trades. Right now, I'm going to I want to share my TC2000 screen with you as well. This is a TC2000 right here. This is what I use for doing my technicals because I can see a lot more stuff on here. I can see that the 200-day moving average is purple, the 100-day moving average is blue, the 50-day moving average is red. So I can when I'm looking at a trade for more technical information, this is what I use. It's a nice charting program. But let's look at QS. We looked at QS, all right? There's QS, right? So here's my chart on QS. These are regular candlesticks, all right? Let's switch to Heiken-Ashi candlesticks. There's the breakout right there, right? Nice breakout in QS. Got Cisco on Heiken-Ashi. Cisco. This is what's called a Heiken-Ashi continuation. Right? This is not a reversal. This is a continuation. You get a nice move up, and you're getting a continuation to the upside. Because this is not a reversal. It's just a continuation. But the continuations are good as well. This MBB. This is again another continuation of Heiken-Ashi reversal. So those are some that I found on here. Now on the short side, tough to find a lot of shorts yesterday. Markets had a pretty big run up. AMH, American Homes. Heiken-Ashi reversal right here, followed by a doji, followed by a continuation of the downside. That's a nice downside trade right there. And if we look at the look at the daily chart, there it is right there, AMH. And we would just confirm it on the TOS program, the SPY super system, to make sure it's okay. All right, and ABBV is another one. Here's ABBV. Looks good for a short. Let's see what it looks like on Thinkorswim. Take a look at the SPY super system on ABBV. Okay, whoops, that's not it. There we go. Okay, so there's ABBV as a short. Is it a good short? It sure is. It's a good short. Beautiful Heiken-Ashi reversal. If I switch to regular candles, it's still going to look really good. All right. So that's how I find these things for swing trades and for intraday trades. That's what you're using here on your 5-minute chart to do intraday trades as well. Maybe you liked it short yesterday during the day. You could have tried to go back and see if you can find a level. And just go back and see if you can find a level where it was a good short. And it's pretty choppy, actually. It's gapped down. It's pretty choppy. Not too many really good entries on ABBV during the intraday trade, but it's a nice swing type trade. It's okay right here, but not great. Okay, so that's what we look for. All right. Does the SPY system allow for scanning, e.g., screening top 10 stops fitting the criteria? The criteria, see, one of the things is, and I talk about this in the room a lot. One of the criteria that you need to make sure the trade's really high probability is you've got to know what the market context is. Is it a choppy market? Is it a trending market? All of that stuff makes a difference. And you don't know that. It's very difficult to program anything like that. I do that. I try to do that with the market internals. But what I'm looking for is these for example, cascading up. These shows me stocks that have got relative strength to the market, so I can look through those. Now I do have some TC2000 scans that are looking for some Heiken-Ashi reversals and things like that that are breaking up through the like the 8s moving up to the 15, something like that. I've got those, and so I find them here. But those are very difficult to program here in Thinkorswim, so I depend on that. But these give us a lot of high probability products, and it's basically when you're trading, when this list comes up, you can just click on them, and it'll go directly to the chart and show you what that particular chart looks like. You can see all your indicators on that chart. Okay. All right. So that kind of covers Heiken-Ashi candles. I hope you found that information useful. They really are a big help, I believe. Okay, so we looked at some Heiken-Ashi reversals. All right, so that covers Heiken-Ashi. Right now, we're going to talk a little bit about the results that we've had in the trading room over the last few years. Show some specifics about that. Then we'll talk about some specific charts again. We'll go over those so we can re-emphasize that. And then we'll get to the end and we'll talk about the options you've got to become a member of the room or the alert service or buy the software. The software is excellent. Okay. These are our results from 2003. This went back to 2003. Hold on just one second. I'll be right back. Hold on. Okay, sorry about that. And now let's move ahead here. Hey, Barbara, thank you very much. Okay, so we'll take a look at the results and see what we've done with the room and the alert service. Again, and again, this was using $2,000 per trade back in 2023, 60,208, 5,017 per month. 2024, about 55, 45.81, a little bit lower. Again, a lot of the profitability is dependent on the actual market. If you've got a trending market, it's going to be a lot better than on trending markets. 2025, this is up so far up through September, 47.7. Again, this is the best monthly rate so far of all the years we've done. It's about 53.07 again versus 45.81 in 5,017. All right, and I just want to point this out. This was back in April when they put the tariffs on and then took the tariffs off. These are the 4 trades we had on in the room and in the alert service. We only had 4 trades on. Tariffs went on, tariffs came off. We had Broadcom. We get in for about $75 a contract, get out for $1.04, 39%. We had Nike. This was a huge one for us. Get in for $285, out for $9, 216% profit. This was, again, we were helped by the tariffs going on because Nike makes all their products in Vietnam. So that was a big move. This is not normal. We don't normally make this much on the trade. And then we had Sarepta in at 450, out at 8. And we had NNE. These are the only 4 trades we had on. This was 25%. These are the only 4 trades we had on. And they were all bearish, of course. We were short all of these. Okay, looking at this year, this is June of 2025. I was on vacation for a couple of weeks. The trade count's lower. 10 wins, 1 loss, 91% win rate, 37.90. July, lots of trades in July. Lots of trades in July. 30 wins, 3 losses, 91% win rate. That was a big month for us, a little over 16, almost 17,000 in profits if you put 10,000 into each trade. All right, August, 20 and 4, 84% again. So you see the win rate stays about the same. I'm not going to bore you too much with all this stuff. This was September. We just wrapped up September, 21 and 4, 84% win rate, $4,744. Okay, and I'm going to just run through these real quickly. This was January of 2024. The only reason I really keep these up here is to show what the percentage gains is. I want everybody to be clear that you're not making 200, 300, 400, 500% on a trade. These trades don't have, they have much more manageable, much smaller gains. They're going to run anywhere from 10 to about 50, 60%. Sometimes you'll get a 96 or 100 or something like that, but generally it's 25, 30, 35, 40% trade after trade after trade after trade. Right, January, February, you're going to see the same things here. This was a pretty big month here, 92% win rate. The alerts that month were 20 and 2, 69.30. Here's May, just jumping around here, but you can see these were time spreads. These are what we do over earnings. See what they produce as well. Okay, June, 86%, 85% in July, August, 89%, September. This was my losing month last year. So I like to point out, people need to be aware that you can have losers. We do have some losers, but this was September last year. 8 wins, 5 losses, 62% win rate, embarrassing to me. Lost 1786. The room lost $295. But right back in October, boom, $7,400 profit in the room, 6,000 profit on the alert service. Really nice recovery. Okay, so I won't go over all of these. Again, I had these in before, but as we've come through, you've seen what we've done here. You can see we got 85 to 90% for the most part win rates, making decent money every month. Okay. Now this is the, just so you know what the alerts look like when you get them. It's going to have the date of the alert right here. The stock, this was Nike, by the April 11.67. So this is your expiration date. This is your strike price. And what you pay for it, about $285. And then you get, that's the first alert you'll see. That's all you'll see. Then you get another one, it'll say that, but it'll say sell order for 9. And then you'll get another one that said they were sold for 9 on April 3rd. Okay, and there could be other ones in between if we adjust the sell price. But that's what the alert service looks like. Okay, and how do we achieve such stunning results? Obviously, we're able to identify when institutions are driving a trade and when the market internals are heavily bullish and bearish. And we only take trades, generally speaking, when both of those are in our favor. All right. Again, we're looking at triple screen assessment, looking across multiple time frames for momentum trend, and we do some analysis on money flow as well. Okay, so again, here's the charts. Let's look at these again. Here's the chart that was with the 8. This is the current one. Is the 8 exponential moving average on the 5-minute. Is the 15. Is the VWAP, the volume weighted average price. Here's your indicators. Here's your pop signals for breaks out of compression. And here's your market internals. That's all you need. Daily chart, a 5-minute chart to find when the institutions are in there and find the very highest probability trade setups. Okay. Again, this was the old one. This is the new one. This is the one that was that I don't use anymore, but some folks are still using it. It has the 15 and it has the VWAP. It does not have the 8 on it. We use the 8 now. And again, the 8's very helpful because a break of the 8 up to the 15 is a buy signal. Okay. And this is the format again of the SPY Super System format with just the current time frame momentum. The folks that are mostly just doing very, very quick trades. Okay. And this was a SPY Super System reversal here. This was a trade we took. Notice that this is a Heiken-Ashi reversal right here. As it breaks down below the 15, you take it right here and you write it down and you could just stay right in this trade. It never broke back up above the 15, you just stay right in it. And the SPY Super System I will talk about briefly. This is for folks who want an intraday trade. This is for intraday trades off a 5-minute chart. Well, you can do it off a 2-minute chart, but I do it off a 5-minute chart on the SPY, the Qs, the IWM, or the futures. This is what I've been able to do with this. This is my results because I can't post these because they're too quick and I can't alert on them. But this is what I was able to do since this is July of 2024 right here. You see how many trades there are, but they produced really, really good profits. I've never had a losing month with the SPY Super System trades. But the thing about this is you're only going to have one trade on at a time, and it's going to be a very short duration trade. You need to watch it, right? So that's for folks that would like to do intraday trading. This just continues with that information. This was 2024. This was October. SPY Super System trades, 48.31, 74.48 in the room. Now, these do not include each other. These are completely independent of each other. This is what I did because I can't post these, but this is what a lot of traders in the room did using that strategy. And here's the actual posted trades, which if you followed them, this is what you would have done. Okay, and November, same thing. December, same thing. And here's the whole first quarter right here of last quarter, of last year, right? So pretty nice number. Again, 24.6 on the SPY Super System, 17.7 on the trade room. Obviously, a lot fewer trades here in the room than on the SPY Super System intraday trades. Okay. All right. And again, this is just want to identify again, just so you can see again how we take these trades. Here was a trade here on the SPY Super System trade on the SPY on the 5-minute chart as it went from red right here to blue. This was before I even had the indicator on here, but there's the breakout right there. All right, breaks above the VWAP and the 15, rides it up. $220 profit per contract, which is a lot, by the way. That's unusually high. Usually it's not going to be that high. This was on the SPY Super System. Again, this was just 2 candles and out. Right? $90 profit. This one here, this was just using the same thing. This is using the modified layout in case anybody just wants to use that one. You can see right here when you get in as it breaks down, it's yellow. You write it down and you're out on this last candle here. Here it is off the new template. Then you buy it right here as it goes green, pops up, you take it, you get out as it flattens out. This was a nice IWM trade, breaks below the VWAP. See the breakdown, everything's red, institutions are selling. Okay, those are the SPY Super System trades for the 5-minute chart. These are trades that we took recently off of this was actually meant to be a swing trade, a line, but it turned into a day trade. As we took it right here, you see how it went yellow right here? Went from buying to selling right here at about 1040. Take the trade as it breaks below the VWAP, see the pop out of the box symbol. Market was trending down. We took it here. We took 51% profit in an hour. I figured it was really no point in keeping it overnight with that much profit. This was URG, and this was a swing we took. See, we took it right here as it break compression. You see the compression break. Take it here, write it up here, 48% profit in about a week. This was an NVIDIA trade. I think I showed this one earlier. This was SMR. I showed that one earlier as well. Here's the Nike trade. We get in here, the 28th. As it was red, you see all the selling that's going on. So we take it there, and it kind of moves sideways. We had some profit here, and this is when the tariffs went on, broke down hard. This is where we took our big profit. I call it gap down. Any kind of a gap you get in a trade that you're in, gap is a gift, okay? And if you get a breakout on a bullish stock or a breakdown on a bearish stock in the morning, take the profits. All right. That was Nike. Right back here to Sarepta, another one that we had short that went good. And HMS, this was a long we took. Again, daily chart. This was a swing. See the nice move up here? See it green? Institutions buying the heck out of this thing. All right. All right. So that covers the charts. It covers the SPY super system, how we find these trades. The indicators to let us know whether the institution's in the trade. I hope that was helpful for you. We've covered quite a lot on institutions as well as Heiken-Ashi candles. So hopefully that gave you the information to help you trade using Heiken-Ashi. So again, here's our strategies. We've covered this, right? Straight calls and puts, debit spreads, time spreads, credit spreads, and also the weekly ATM strategy, and the SPY super system, which we take in the room quickly, but you're responsible for your own trades on those. All right, so this is the offer that we have right now for anybody who wants to partake, be a member of the room or the alert service, or buy the software. We'll talk about that, and I think in chat, by the way, there's links for the links for all of these. This is a one-time payment special, but if you can take a two-week trial, free one. All right, we get to the alert service in the room, and you also get to see all my videos, about 31 videos. And then it reverts to $396 a quarter after the 2-week trial. Now, if you're looking for a way to get into the room or the alerts for a lifetime, this is a lifetime payment right here. $24.96 gets you alerts for forever, and you also get the training videos, and you also get access to the private Discord chat room we've got 2 additional full-time professional traders in there for that one. Okay. Now this is the one that is, to me, is a no-brainer. For $24.96, you can get the access to the trading room forever. You get the SPY super system software forever, all with updates. You get that. Rightline will put it on your computer for you, no charge. You buy the software, they put it on. Make sure it's configured. It's going to look exactly like mine. You get any kind of updates to it as we improve it, and then you also get all the training videos, and you get the Discord room. $24.96 for a one-time payment for all this stuff, which to me, this is like a no-brainer. Now, if you want to talk to Rory about this, perhaps you only want to get it for a year or something like that, then you want to talk to Rory about that. I'll give you his number in just a sec. Here it is, 786-732-4656. Okay, that's Rory. You can talk to him. And one thing I did a little return of subscription here, and this is a return on subscription investment. And I assumed that the maximum would be $1,600, which is if you took the quarterly for a year. That's about $1,600 bucks, a little less. The average trade size of 2,000. Assume all trades are taken. The historical results every year, you get a 40x ROI per year. So annual profits have exceeded 40 times your subscription cost. Pretty impressive to me. And subscription is consistently paid for itself many times over. Again, ROI, return on investment, simple math, and it's proven results. So this is what we've done so far. I go on, again, disclaimer: past performance is not indicative of future results. Trading involves risk. We all know that, but that's what it's returned. Right. So this is what the offers are. You get the two-week trial. or to get the alerts forever, or the room and the software forever. And again, you can talk to Rory for any modifications to that. All right. So I want to thank everybody for being here today. I appreciate it. Thank you very much. And look forward to seeing some folks back in the room on the alert service come Monday. I hope you have a great weekend. Thank you very much.